This is Justin Pulitzer. This is my midweek video for Wednesday, October 18th, 2023. I'm filming this at 10:49 p.m. So we had a pretty big drop in sentiment week over week. We went from 60 to 41, and even intra-week from the CPI read from 51 to 41. So it doesn't surprise me. It was a little bit hard for the market to just drop right away. And in the events of not seeing anything unexpected out of the Middle East over the weekend, and having repaired last Monday's rich close this past Friday, we were kind of seeing the stars align for a bit of a technical bounce, and we did, and we now stalled at some resistance. So we'll get to the what now in just a sec. CNN gauge, a little bit better than a week ago, but still fearful. I always like to see these things get to extremes, but not quite there just yet. As far as the economic data goes, so the whole rally up until the recent weakness was on the idea that the recession was pushed out. But now we're getting into the, real meat, I guess cutting through muscle and maybe into bone at this point with interest rates. The Fed took us up to 5.25 to 5.5%. And the whole theory now on, the continue rally is not only the economy kind of just muddling through and holding up, but also on the idea that the Fed might be done. And not necessarily such great news. Retail sales were revised higher, so that's good. I mean, those stocks have just been killed. But we beat the consensus estimates too, and this, I guess, along with a hot PCE number, CPI, PPI, gives the Fed a little cover if they do want to go again. Now, I do believe they've been... And we have another Fed meeting in 2 weeks, by the way. That's going to be on October 31st to November 1st. That's going to be the Halloween Fed meeting. Could they have picked that any more purposefully just to F with people? This time of year does tend to have a lot of volatility. In 1987, we crashed on the 19th, which will be 2 days from today. When I'm recording this, or a day from tomorrow when you're probably watching this, or 1929 when we crashed on, Black Monday and Terrible Tuesday on the 28th and 29th. So I don't know if we're lining up for another one of those, but, tensions could be high here. So like I said, I don't think they're going in November. They've been very deliberate in using the proceed with caution terminology. So I think November is pretty much off the table. But I do believe that they could signal a potential rate hike in December. And we're teetering around levels here. A week ago we were 25. A month ago we were at 34. So we are kind of back to where we were a month ago plus. And people do still think, and I might be one of those people, think it could be possible. January now was also sort of on the table. I know Leisman was all excited talking about January. I'm more interested in December, though, because it's the holidays, and I think they could kind of slip it in with seasonal strength. 2 years still too high, well above 5%. Got to get that back below 5% to be good for markets. And the 10-year is very close to that 5% target we had been looking for. It wouldn't even surprise me to see an overshoot at this point. And I will show you on the chart, TNX is looking potentially about to go parabolic, which I don't think the markets would like too much. They wouldn't care for that. So a couple of big events this week I think will determine the balance of the week. We have, first of all, we have the monthly OPEX on Friday, if things couldn't get any more hairy. But we have Netflix earnings and Tesla earnings on Wednesday after the close, and I think that will skew the mega caps, the Mag 7. I guess that's the current incarnation of the name. It used to be Fang and Candies and all this nonsense, but Mag 7, whatever. So Netflix and Tesla are going to be reporting. Netflix, I think we know, has some idiosyncratic issues. They had the strike, but I think more importantly, it's going to be their conversion of subscribers. How are they doing with getting people on that ad supported tier? That's the free tier or the cheapo tier. And is it eating into other subscriptions? I think they caught a lot of the low-hanging fruit of people who were tag-alongs signing up, and I think that was cause for the last market rally, but shortly after they reported earnings, they sort of said that the ad-supported tier wasn't doing so well. So we'll have to see how that plays out. I'll talk to you about the trade setup when we get to that. It's the same thing with Tesla. We'll take a look at that chart. I usually, generally speaking, though, don't love trading Netflix ahead of earnings. I think this time might be a little different, though. There could be an interesting setup, but I usually view the Netflix is always the first of the big cap techs to report, the Mag 7 type names. And it's sort of like when you're at Little League and at bat with a new pitcher, you usually like to let the first pitch go just to see what they're throwing. I tend to do that with Netflix, but in this particular case, there might be a trade to be had. I'll show you what I mean when I show you the chart. VIX, not giving it up. I told you I didn't think it would get much below 15s. I mean, maybe we get a tap into 14s, but 15, 16s seems about right, given that we're coming into earnings season and we do have the Fed on the horizon and we haven't really seen a volatility spike yet. Do we have to get one? I mean, we didn't hear. We got a collapse, but we have in the past. So maybe we're due. Keep that in mind. I do think if TNX, and I'll show you, does do what it is threatening to do, that could be some problems for sure. I do think that the market could leg lower if and only if we start clearing 2133 to 2081. Recent highs, we could get up into the 22s, 23s, maybe up to the 25s. I think 25-20-ish is sort of like the max allowable move before we have to start worrying about like limit down type opens, which we could see into like 29s and 31s. But anything over 23 is elevated, and anything over 25-20 really becomes problematic. That's more than just a garden variety volatility pop. And I view what we're seeing now as sort of just garden variety. We've been a little bit cautious, but, not ultra negative. TLT. I think this is almost the backwardation contango version of bonds. You have front month treasuries, particularly the more dated ones, 3-6 months a year, yielding like 5.5% plus. And you have things like the 30-year and the 10-year yielding 4 and change or 3 and change, high 3s, 4s. Why would you do that? I mean, what are you really locking in? I mean, the risk here for me is still higher rates, right? So why do that? Potential higher low here, but I do think this is going to run into problems at 91s and 93s if we do get some kind of an oversold bounce. So, and we may have tax loss harvesting in, the instrument, so it could just become a self-fulfilling prophecy. TNX, this kind of looks like it could go parabolic. I had done some fib extension work. The 2 times range is 54.13. The 2.618 is up at 60.80. If either one of those eventualities or potentialities, I should say, takes place, market's not going to like it. No. And it looks like we're kind of breaking out of a base, right? We had a gap up, pull back, higher low, and moving on up, right? So, until this kind of calms down, I think, could the market rally on any given day? I mean, yeah, it's possible. But are those gains going to be sustainable? And now we have to question, are we in a new up channel, or are we going to just, go parabolic and pop up? Remember what I said about things holding 10 and 20 MAs. We're above the 10 now, and we are above the 20. Anything back below the 10, I do think could maybe pull back, but, could we at some point check back to 43.33? Yeah, the market probably like that, but will that 43.33 to 42.23 now, which had been prior resistance, be support? All the major moving averages are upward sloping. So, yeah, TNX, potential problematic issue. Someone asked me about ETFs they could use to capture the near-dated premium, the higher yields. And this does tend to trade in a fairly narrow band, so get it in the lower 91s. It's not bad. It's the 1 to 3 month T-bill. Pays a monthly dividend, and it's currently yielding, drum roll please, 5.16%. Not too bad, right? Not too shabby. As my old high school science teacher used to tell me when I'd get A's on tests. He'd tell me not too shabby. It's like it was expected. KRE. Interesting that this is bouncing. It did get into some resistance. I covered my short position a while back, I had an overwrite on, and I think just an outright short naked options, and I covered them. It did pull back, but now we're kind of pumping up again. Is it out of the woods? I don't know, but I'll say this. If you want to be long the 20MA and 10MA confluence down in 41.22 to 41.23 is a must hold. If we get back below there, may God have mercy on your soul. We do have the 50MA and 100MA coming up, and we are back into some resistance. It's interesting, though, that it's off of a bit of a higher low and edging up a little bit of a higher high. I think Bank of America earnings help this, although regionals and the big banks almost, I think, are seemingly at odds at this point. I would much rather shorter term be in, I guess, the bigger banks, because they have larger deposit bases and they don't likely have to realize losses. But Bank of America seems a little cocksure on that. I don't necessarily know if there's a bit of a run on the tape that they might not have to have some problems. That being said, I think you could be long as it's above the 20MA, 27.03. So long as it holds there, flat or short below. The dollar. This is one of the legs of the pain trade. Interest rates and the dollar and seemingly oil, but oil I think is more of a geopolitical risk and global growth proxy at this point, but still I guess maybe edging its way back into the pain trade graces. Dollar. Dixie, and this is really weighted heavily against the euro, just an FYI. I used to use DX, but they started charging for the quotes, and I don't really trade the dollar that much, and if I do, I usually trade UUP or Dixie. So anyway, we're making a bit of a lower high. We're right on the 20MA. For me to really feel like this is rolling over, needs to get below 105.534. And then, of course, we run into the 105 to 104.636 support band with the 50MA now. And that probably would bounce it back up into these 105.631 to 105.883 area. But, it is sort of cooperating, but maybe not enough that we would like. I still think profligate spending longer term erodes the dollar. And this, to me, is just sort of a bounce after a very large and protracted downtrend. Just curious, we haven't done this yet, but if we put on a fib retracement, look where we stalled at about half back. So a pullback maybe to 105s, but could we get all the way up to the 61.8 at 109s, where I do think this really broke down from, and this to me would be kind of max pain end range price target. Man, I don't know. I can't tell you. These things just look... They just look very dangerous. Rates look dangerous. The dollar looks dangerous to me. But, we've seen this kind of bounce before, and I'm a little encouraged that we have a little bit of a lower high. And I think if you want to trigger an alert for a long, maybe one over 106.788. So let's put an alert there. Create alert. 106.788. And I'll say, long the dollar. Okay. So, yep, if we clear that lower high, it should go. So keep that in mind. It could also be a trip for shorts and stocks. Bitcoin. Now, we got that favorable ruling that, Grayscale could basically pursue their ETF. I actually had been long Grayscale. I didn't sell it on this day, which I kind of regretted. Bitcoin pulled back, but I did not miss the opportunity a second time when this rallied up into the 30,000s, and I sold out of my Grayscale, and I also lightened up some of my cryptos. So what now? Well, you have a dubstep setup here, and dealer's choice. I'm cool with using this low, 28,245. Anything below there, I think you could stop out or maybe even try short. But above there, I'm cool with sideways to higher, and it does seem like this may want to percolate a little bit up as long as, things like gold, catch a bid, crypto is sort of that ilk. And gold does sort of look like it's motivating, which is interesting because the dollar has been strong, and these things are priced in dollars, so it's rare to see a rallying dollar and seeing rallying commodities. I think this is because of the war premium, but we are still stalling around the 200 MA. I'll keep it simple. I don't really think it's a short until we're back below the 50 MA at 176.35. Anytime we've gotten below the 50 MA, there's been risk to the downside. So I would imagine the 50 MA is support until it's not. And if we do get back below there, maybe we get a pullback all the way to the 20 MA and the 10 MA. So that could be interesting at 174.14 to 173.52 and rising. Oil. So, you know, just imagine the difference we'd have right now if we would have had the Keystone XL pipeline and more drilling permitting in Alaska. I'll tell you, even if Trump gets back in office and greenlights it on day one, which I do expect, it's going to take like a year to get all that stuff online. And that's, you know, assuming you don't get like liberal judges who block it, you know, for ideological reasons. Ultimately, you know, we're going to have to get more stuff online, but neither here nor there with that conversation for now. The more important is key levels. 20 MA seems to be stalling, 50 MA seems to be holding. I don't feel comfortable with oil being lower until we get below 85.41 to 84.89. If we do, I think it could go lower and we'd have a lower high. But if this gets up over the 20 MA, oof, we could get back up to 92s, 95s, and even make a run at 100. So, you know, we're like one stray missile away. Keep that in mind. Things could get kind of crazy. Shorter term, you got Biden going over there, although now I hear they canceled some of his meetings. It seems like not a good trip to me, but I think there could be the perception of it cooling tensions. Just use the 20 MA. Anything above it, more bullish than bearish. XLE. So, oil stocks are catching a little bit of a bid from weakening in tech, which makes some sense to me. I've seen some downgrades in Apple. Everyone now seems to say that it's not the new phone isn't doing well. I mean, all the data points have come through saying that they are doing well, but we keep seeing these sort of downgrades. I don't have any proprietary knowledge on that, but, you know, I think the phone is probably doing fine. As far as key levels here, we're right into some resistance, so probably a good area to trim into. I don't really see this getting bearish or falling apart until we lose the 50 and 20 MA, 89.06 to 89.39. I'm cool with using 90 as a stop, and if you're aggressive, short below. But yeah, I'd be trimming a little here, and then if we did get up to the 93s plus, 93s to 94s, but oil stocks are definitely soaking up some of the allocation money, and it's likely coming from things like tech. So, and, you know, XRT, which has been super weak, but we'll get to that in a little bit. I'm going to pull up SPY. Then we're going to talk about ES and NQ first. I'm sorry, I know the chart's a little messy, but real traders trade and they have real levels that they use. So let's talk about ES and NQ first, okay? Because I think that's the most relevant to the short-term conversation. So I've told you before, the bulls need to get up over and stay up over 44.14.5. We had a look above and fail, and we came back down. We are sort of making some higher lows, and we are still above the 200 MA 15-minute, which does keep us still on our good graces. Remember what I said, anything, should we use this one since it's RTH, RTH, that makes a little more sense to me than using an overnight level. But what should we say about this? I think as long as we're above the 200 MA 15-minute, or if you're, we're on the hourly here, so hourly 50 MA makes sense to me, or the 200 MA 15-minute. Let me go to the 15-minute chart just so you can see. 30 days, 15 minutes. I usually like to do these longer time frames lately so I could show you more on the chart, but we did have a bit of a head and shoulders. It didn't really break down, and we're kind of back up deep enough into the head where, to me now, this just looks like a lot of chop. And you can see we're holding the 200 MA 15 minutes, so that's good. Anything below there to me gets problematic and more short looking. This was a pure short squeeze here that we saw. We saw it Monday, leveled off, big pullback to, I guess, now channel low, short squeeze again. Look, keep it simple. They both kind of petered out and stalled at 44.14 half to 44.30 half. Let's see that clear and hold on dips for us to feel confident. If we're below 43.77 quarter and then 43.58 half, it gets increasingly more bearish. On the upside, where could we ultimately rally to? Well, 44.30 half is a key upside level, and then 44.8375. Are we going to get it all the way back up to 4,500? I mean, I guess it's possible, but I do think that area would probably be a short. Let's talk about the Qs. Couple things to see here. We had lower highs here in the Qs as opposed to the ES, and you usually want the more risk-on, higher beta stuff to be leading, and it's sort of lagging. But, you know, I don't mean to nitpick, but it is. We did pull back pretty deeply. We had a look below and fail of the 15,060.75, and we rallied like a scalded chimp back up over some key levels here. And I'll just keep it simple. Anything over 15,253 to 15,237.75 would get me a little more neutral to bullish. Anything below there, which we currently are, is a little more neutral to bearish. And if we start slipping back below 15,185 quarter to 15,160 quarter, it gets increasingly more bearish. And then, of course, if we were to lose 15,083 to 15,060.75, would the 2 times range here at 15,037 quarter hold? Well, I would say probably not, and we'd likely come down to 14,903.92, and that could happen if we have a crappy Netflix and or crappy Tesla. So keep that in mind. I'd be more encouraged back up over 15,352, okay? Assuming it's not resistance. And then if that clears, we could get up to 15,427 half and 15,468.75, and then just still be in the upper band of range resistance. So we're not even into that yet, okay? If that were to clear, there's 15, you know, the 2 times ranges here at 15,535 half, 15,660 half. And then ultimately, I think we'd probably stall out closer to 15,855 half if we were able to kind of run here. You got the levels. We'll see if we clear that 15,352 or if we start losing 15,160 quarter and then 15,060.75. So to be determined. We have a 1, 2, 3, 4, 5, now 6-day range. We've had one look above and fail of the prior range setting high at 437.22, which ultimately led to a much larger pullback, but it did hold the 10 and 20 MA. So, you know me with 10 and 20 MAs, and you know me with reference levels, and I'll keep it simple for you wonderful ladies and gentlemen. Anything above 433.01 to 431.19, I think is still kind of a reference range okay. Back below there, I do start getting a little bit more concerned, and if we were to lose 429.88, I think we're coming down to 424s, 425s, and maybe even getting a proper test of the 200 MA, which we didn't the last time. So, yeah, and then we'd see. Of course, this would be the second test, and I told you, I thought these lows, yeah, there are a lot of bottoming tails, but they're not really excess lows, and it wouldn't surprise me to see a little excess if we got some bad news somewhere into like the 418s to 410 level. But as of now, I think I mentioned this in the last super follower video, so I guess this was late night Monday, early morning Tuesday. The kind of big screw job I think would be to everyone here would be if we just pin somewhere between the 50 MA and the 20 MA and just chop around in this big range until options expiration. Now, is there anything that maybe supports that thesis? Well, the max pain pin is $430. That didn't change, by the way. The market maker expect to move is $6.17 into the move on Friday. So, that's within striking distance here. I always find the market maker expected move, I mean, it's interesting. I do think the max pain level, though, is more relevant in a few scenarios. One is a jobs Friday. That's always a must. Another is an OPEX, like a monthly, which we do technically qualify for this Friday. And then, of course, on quad witching and triple witching, they like to kind of sweep the options. But I do caution that options volumes are so high these days, you could see intraday and even, first of all, intra-week, but even intraday shifts. So just keep that on your radar. If we do clear ultimately this, 437 to 438.43 and really the 50 MA, how far are we going? I mean, 439.81 is the 50% fib. Okay, I could see that, maybe stalling, but 442.75 to 445s. That would be the old Jackson Hole high of day and the 9-7 breakdown zone. So if you're doing some kind of a call spread, you might want to, or let's say you're long just calls and SPY, maybe like sell one of these as your hedge would make some sense to me. Or if you're long SPY, you could sell calls against it. That would make some sense to me. And, if you're going to stop out, to me, below, 431.19 would make some sense. I could even make the argument 433.01 would make sense to me. So, all right. That's my story. I'm sticking to it. The upward resistance, where I said I thought we would, likely find some support. So that could be the case here. And like I said, my operating thesis here is that we're just going to be in this big choppy range, and we're going to see breakouts that fail like we saw today, and maybe even breakdowns that fail like we may see in the coming days. DIA, the max pain pin actually moved up $1 from 338 to 339 since yesterday. So yeah, there's always that. The market maker expected move here, $4.24. So what's the trade setup here? I think it's simple. If we lose the 200 MA and the Tuesday low, I think it's short for a flush down to at least, I think, the 10 and 20 MA, 336, maybe even lower. I mean, we could even check back to 330. On the upside, you have the 50 and the 100 MA and an old key reference high and a downtrend coming into play around 434s. So if we do pop up, that could be some resistance. It's interesting, though, that we're stalling just shy of that. And we're even kind of stalling at the old breakdown from 825 at 340s. So keep that in mind. And if you're, like I said, if you're looking for a short below the Tuesday low would qualify. Anything above there, I think it's sideways to higher, but below I do think dumps. IWM, expected move there stayed the same. The expected move is $3.16. The max pain pin stayed the same at 177. The only ones that moved up, by the way, are the D and the Qs. They both moved up by $1, and I'll show you that in a sec. But the 20 MA, I originally had this first real resistance up here, and it sure enough wound up being. We had a little mini kind of, this to me is not a look below and fail. Let me make this, it's just a look into range and support. A little bit of a higher low, a little bit of a lower high. If you're long, 173-ish to me is the stop below the 10 MA. And where would this rally to? I mean, this 50 MA, 181.94-ish. 181.62 to 183.77 to me is upward resistance. So if you're doing some call spread, that would be your upper strike. And if you're long shares, that could be a nice short call against your shares, covered call strategy. The Qs, expected move $6.30, max pain pin 368. So that would imply we're basically going to close the week right around here. Could that change? So the Qs had been a little stronger. We did get up to that Jackson Hole high of day and into some resistance. We pulled back. We broke below the 50% fib. We got just shy of the 61.8, and now we're around the 38.2. But we are still above the 20 MA. Now look at this. We're one time framing to the downside. Every day has had a lower high. So very simple. If you can clear and hold over the Tuesday high here of 369.92, yeah, I mean, we could pop up to 375.66. It's very possible. But anything below 365.35, anything below 363.66, and then for sure anything below the 20 MA, 362.20, could be retest 357s to 354s. I don't view this back off here as super bearish, by the way. The last 2 days of kind of the dips have been bought. Granted, we are one time framing, so I'd feel better if that ended and we could go higher. We are above the 20, 10, 50, and 100 MA, and of course the 200 MA, which is much, much lower. So still looks all right to me. But if you lose these kind of double bottoms, I don't know that the 20 MA is going to hold. And if it breaks, it could get a little slippery quickly. I always feel better over 50% fibs. So yeah, wait till it clears 369.67 to 369.92. I'm actually going to put an alert there. Again, careful for a look above and fail, because that could be problematic. And I would say row long, at least right or right out. Will I be waiting for the big earnings is the big question. We'll get to that in a moment. Get to the airmen in a moment, Colonel. What were they, Cecil and O'Malley from A Few Good Men? Oh, that was a great movie. Can't handle the truth. SMH pulling back, also one time framing. I think NVIDIA had some crappy news about their chips not being, exported to China, although you really don't think China is going to buy them under false holding companies in other countries and ship them to themselves. I mean, come on. All right, so the 20 MA is the must hold. All right, 145.87 if you want to be long SMH, that's it. And I'd feel better even still over the 50 MA at 148.70. So if we can clear there, probably get back up to 150.46 and maybe back up to 153.26. And then the question is, are we just in a big chop range? Could be. I'm sort of that opinion that we could be in for some chop for a little bit. NVIDIA, a bit of a head and shoulders forming. I don't hear anyone talking about that, except, of course, this broadcast. And I do have a little potential neckline between 409.80 and 403.11. So if that were to snap for any reason, could get ugly fast. Everyone's still super bullish on this on TV too, by the way, right? We're below the 50 MA, we're below the 10 MA, we're a little bit below the 20. We are still above the 100, which is the key. So anything below the 100 MA to me is a little more bearish. 137.99. Anything above is still kind of okay. We'll probably need earnings or some news to really snap the neckline, so I doubt we get any resolution on this, and we're probably just going to get a lot of chop. And then, of course, the neckline is down here around channel low, so could we bounce first before ultimately breaking? I could play these games all night. AI. I think NVIDIA also will be subject to what I'm about to tell you. I think that this is going to move on Microsoft earnings, which are on 10/24. So you may have to wait. We're kind of riding the channel low here. We are below the 200 MA, which now seems to be acting as resistance. Very simple. If you want to be long, low of day of 24.33 is a hard stop now. Look at this big up candle. We've seen these before, and then they get retraced quickly. There should be maybe a little bit more pinprick up here at least. I was short some puts in this. I used this rally opportunity to take them off because the stock wasn't really rallying off the range lows. And honestly, I just got impatient. Simple as that. So, looks all right, but I think it's going to need some catalyst for the upside, which it may get in the form of Microsoft earnings on 10/24. So mark your calendar, either up or down. Netflix, I took the liberty of looking at the Max Payne pin. Yes, individual stocks have that as well. It would be, in this instance, drumroll please. Anyone? Bueller? All right, 385. So it could rally. We're on channel low. The money flow is really not confirming the new lows yet. Let me just tell you, if this rallies ahead of earnings up here to 376s, like to the 200 MA, it would not surprise me to see it break on earnings. What I would love to see, and I don't know that we're going to for sure see this, but this to be down into the 339 to 332, get some kind of crazy panic ahead of the number. Everyone hates it, and then it rips up and rallies. This is around the levels it's rallied from before. Is it down enough already? Yeah, probably. It's a harder short here. I mean, they really have to screw it up, but we did see them announce here that their numbers with the ad-free tiers not acting, they're not selling as many ads as they were hoping. Go figure, into sort of a slowdown in the economy. Although you'd never know that if you heard the cheerleaders on TV. But, you ask anyone who's paying a higher mortgage rate and more for gas. And, there's no inflation, according to Paul Krugman, unless you're looking at cars, gas, food, and housing, where, basically there's no inflation once you take out all the inflation. Anyway, max pain pin is higher. At this point here, if you want to do some kind of a call spread for a move up, I'm cool with that, particularly if we're down Wednesday into numbers. If we're up into it, I'd be careful. But here's another thing. How do you like this? If we're up early in the morning, you could use that opportunity maybe to sell. If you're long, trim out a little bit or even try an intraday short. But I'll tell you, if we're down enough like into the late afternoon, it wouldn't surprise me to see a little bit of an intraday short squeeze into the close. This could be like the green room trade, like color of money style. And you could get a pretty nice little rally into the end of the day and maybe not even play long for earnings, but play for that little squeeze at the end of the day for earnings. Yeah, you know, I've been trading, you know, for a couple of weeks now, you know. All right, so Tesla. This is also another one I usually like to play for a short squeeze ahead of numbers, but not for actual numbers. I honestly have no freaking idea what they're going to do. I'd be really surprised if Elon Musk muffs it here, but we do have a pennant forming here, and I really would prefer to see it break the pennant. Oddly enough, drum roll for the max pain pin, it's right here at 250. So Tesla might just be a lot of like chop that kind of like finishes the week flat. 100 MA is key, so I'll tell you what, if you want to use that as your true north, anything above that remains okay, bullish. Anything below, not so great, but I mean, I could make the argument here either way, pattern-wise, chart-wise. Ultimately, we're still in an uptrend, and we're sort of transitioning to a down channel, but still within the uptrend, so I'm cautiously optimistic. If they have bad news out of China, though, it's not going to be a good situation. But you know, Musk knows how to pull rabbits out of hats, so you kind of have to wait for the conference call. As crazy as that sounds. Apple. I really am skeptical of the downgrades until we hear one from Morgan Stanley, which is the axe on the stock. The axe is the most important, analyst. They're the top analyst. We'll see if we get that or not. I just think this looks very choppy to me. It stalled where it should have at the 61.8. We're supporting off the 20 MA, and we're caught between that and the 50 MA. I'll tell you what, if you want to be long, and I'm cool being long, just use the 20 MA as your stop. 175.47. If you want to use low of day, 174.80, that's fine. I would love Apple lower into earnings if it's up enough into, because I do think there'd be at least a pop on earnings. Whether it holds or not is another story. But I think if Apple's down into numbers, it sets up better than if it's up into numbers. If they keep rallying it into numbers, there could be like this frantic scramble to be long ahead of earnings, and then the earnings probably will end up being either a pop and flop or just an outright dump. Costanza, Microsoft. So I told you they report on 10/24. Do not ignore this if you are in any AI play, because this is going to matter. We're above the key moving averages, but we're below the key range high. 335.14. It really needs to clear there. I'd get bearish below 3. I'm going to put an alert here. 325.36. I did some put ratios on this that did not work, but guess what? They didn't cost me anything because I did them for a net credit. That's why I like doing those frickin' things, because they don't cost me anything. They have very high risk reward benefits. The way they get into trouble, by the way, is if the stock comes down too hard into, like if it crashes, like if it's down 30% the day after you put it on, you don't want to do that unless you're in the same week expiration and you're geared for that. So just keep that in mind. There are ways to delta hedge it and short shares, or adjust strikes and roll out to longer data. I mean, there's a lot of ways to defend against it. Sell calls, call spreads. But we'll get in, we won't get into that for the purposes of this video, at least not at the moment. Very simple. We are in range, and if you're long, 326.35 to me looks key. If you want to use the 50 MA, 325.01, that's fine. If you want to use the 20 MA, that's fine too. I'd get more. I'd be aggressive short right or right out below the 326.35. And then if it breaks the 20 MA, I'd really press on it hard, because you could see once that's broken, it's accelerated. So, the 20 MA is going to be real key if it breaks. But here, just to me, looks like it broke the downtrend, and it's sort of like flagging out a little here. Might be just waiting on earnings. So, Microsoft, the chart looks all right. I mean, it sort of looks like a bit of a cup and handle here, or a double bottom. I'd be real aggressive if it broke the 2 times low here. But to me, it just looks like chop, and it's sort of a hard pattern to do anything out of until you get earnings. Adobe. Also, software for a service. It's got to get over 569.98, and it's kind of teetering on key levels here, 552.14. I'd get bearish below the 50 MA. That's my pass, don't pass line at 531.24. So wait for that if you want to get short. Till then, sideways to higher. INTU, JP Fave, they do accounting software, very exciting stuff. They do TurboTax and QuickBooks, which anyone who runs a business, particularly small business, uses. Above 10 and 20 MA, it's above the channel. It just looks like it's consolidating. It's a little overbought here, so I'd probably trim a little. And I think if you get below 530.30, you could try short or stop out, okay? Google, the googliness. You ever see that movie with Vince Vaughn and Owen Wilson, The Internship? It's so funny. Two nickel-sized men out in the world. Think of the possibilities. We're still above the 10 MA. I'd get more bearish below 136.62. That seems to be a trigger level. 136.62. So if you're long, that's your stop. And if you're looking for a short, that could be it. We had talked about booking at longs at channel high. I don't have any position on in this at the moment, but I am open to suggestions. I would love a pullback ahead of earnings if they keep running. I mean, this does, I have to tell you, this sort of does look like it has that want to go parabolic look, but I never just assume that. I'm assuming it's going to keep to the pattern norms and just be choppy in a range for a while. So if you want to do some strangles or straddles, or I shouldn't say straddles because that would imply a larger move. Strangles or iron condors is really what JP meant to say there. And of course, JP loves to talk about himself in the third person. George is getting upset. All right, so we're in meta here. Got up, look above and fail, but if the look above and fail fails, this thing's going to run. Anything over 326.20 is good. Anything below there to me is just sideways. And I'll tell you, if you're long, the 10 MA, I told you, is the must hold. Below there, stop out or try short. It's currently 317.78. We are riding up on channel high here. So if you didn't book any up here, I'd maybe a little off the top there. RBLX. A lot of people like to talk about RBLX in the case of, in meta. This to me looks like it's in a big range, like 47s on the upside, 25s on the downside. We're probably closer to the lower end than not. It is a little overbought. I don't love that it ran into numbers. I'll tell you, if this loses the reference lows from 23.88 to 25.32, could this get down to 14s? It wouldn't surprise me. We've seen the gap down before, rally, and ultimately gap lower. You might want to just wait for earnings at this point. If you took it, I'd raise my stop. Don't let it get below low of day. If you're long, don't let it get below 30 bucks on you, all right? That's my my thinking there. Amazonian. Holding the middle channel over the 20 MA. Let's keep it simple. It looks like it's caught between the 50 and the 20, so short below the 20 or long above the 50. And I do think that this is just going to be choppy for a while, probably waiting for earnings. 135.29 is a key kind of gap fill resistance level. This to me also looks like chop, and it's probably going to depend on earnings. And it could be a Costanza play if it rallies too much into it. Maybe it goes lower. If it's down enough, could be a buy the dip. You got to imagine if XRT, if retail sales are better, maybe Amazon is benefiting. We're into some resistance here on XRT, so if you're long, you probably want to trim a little, 61.41, but it is above the 20 MA, and you do have technically kind of like day 2 of a downtrend break. I really consider this day 1 because this is really not conclusive to me. So what I'd love to see here would be a dubstep, and then you could be long up over the 2-day high or short below the higher low. And I kind of think it may play out that way. Costco, they upgraded it. It immediately dumped, and now it's challenging highs. If you didn't book some profits, probably a good idea to do so. I think you could be long as it's above 58.24. Below there, stop or short. So, yeah, that's the key for Costco. Great business, by the way. Nike. We're up into the JP resistance zone, 102.90 to 105s. I had told you I was bullish here into earnings. I thought we'd pull back after that, but I thought ultimately once we made the higher low and we're holding the 20 MA, we'd rally, but now we're into the zone where it really broke down from, so probably got to go. Disney, I had been short puts. I am now flat. I booked some the other day, and then all of it, not today, it was yesterday. I booked it all when it got up here. It's, you know, oddly enough, the stocks that were really crappy, the Disney and the Nike, are actually, the charts are looking better to me. I don't know what they're going to do into earnings, and I am leery if they rally into it because I do think it could dump again. But I'll tell you, if it holds the 50 MA on pullbacks, you probably could be long against 84s. And by the way, if you're currently long, don't let it get below 85.16 on you. Okay, that's your raise stop. But I'd get much more bearish below 84.07. But, you know, I hate to say it, the chart's looking better. Maybe these woke companies are coming around. Booking. Chart, this had been a total stud for a while, but sort of is transitioning from bullish to bearish, right? We're stalling on 20 MA. Wake me up for the long side when it clears the 20 MA, or if it gets back down into key reference areas, maybe closer to the 200 MA at the time, 27.18. Booking, I don't love messing with the stock that much. I do trade it on occasion, but it's rare because the distance between the bid and the ask is super wide. It's inefficient. You really have to work your orders, and the volume is not really enviable. ALGN Technology. I'm wondering if this is going to be a pop and flop on earnings because I don't know what this is. I know this is. I'm like, this isn't my office. Little Jeffrey from Paul Reiser, Beverly Hills Comp 2. No real excess here. We're back up over 273.46, which is good. The last earnings was a pop and flop after it had kind of been up, though. And then the earnings before that was a dump. The earnings before that was a pop and flop. I do like Align. I am a fan of the stock, but it's got to stay above 275.39. Look, they're a Smile of the Month Club. Direct went bankrupt recently, a direct competitor. That's got to be good for them. I am still getting a lot of online ads for them for 40% off. But Align is, you know, a little bit of a different breed. I think if you want to raise, if you're long, 270.93, which is the low of day from Tuesday, is a hard stop and maybe a short below. I just don't know that we're not going to have like, you know, a final excess move lower because this doesn't look like real excess to me. It kind of looks like this last one that led to lower. So this may be determined on a bounce. If you're going to do this, I do it with a call spread. I'd probably buy 20 MA and sell 50 MA. So like buy 290, sell 2. What is this? I'm 290. What are you talking about? Buy 290, sell 325 or below, maybe 315 if you want to be around the 200 MA. That's really where this also kind of really broke down from 316s in the last leg. So yeah, I mean, it's down enough that I'd probably be inclined to try it with a call spread, but it might not last long. So you probably want to be quick to book that at the open if it does pop. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. But one more thing to pay attention to. I don't think he's going to say anything that's going to be really market moving. But Jay Powell has been known to speak off the cuff a little bit. And we also have a Philly Fed, by the way, which could be important on Thursday. Usually those numbers are crappy. Existing home sales is going to be key. But Jay Powell speaks on Thursday at noon. We'll see what he says. I'm expecting him to stay with the, proceed with caution language, but if he says something stupid off the cuff, it could be market moving in either direction. It's usually down, but you never know. All right. Cheers.